Hello, good evening. Can you guys hear me? Can you guys hear me? All right. Okay, so we'll continue our teachings. So yeah, let's continue where we left off. Just access this. All right. So keeping a journal. All right, keeping a journal. Spoken about backtesting and intimacy. All right. So backtesting is basically going back in the chart and basically high probability trades are trades that are in the direction of the trend on a larger time frame. So it will be hard if you are trading. Let's say you are trading intraday and you are trading on the side of the daily or weekly trend. All right, it's going to be very tough for the market to go against you because you are on the side of the weekly trend. But if you are trading against higher time frame buyers, that is when you are in low probability conditions. All right, so basically that's the difference. All right, so what you want to do with backtesting is just to go back in time. Right, go back in time and check um during um during the times that the price is going towards the daily or weekly targets. All right, so for example, if I go up to the daily chart, for example. All right, so I want to look within all these price swings here. All right, I want to look within them and look for setups on the lower time frames. But if you want to trade the daily chart as a person, let's say you have the finances or the funds to do so, because you typically need quite substantial funds to be trading on the daily time frame because your stop loss will typically be around maybe 50 to 100 pips. So, but if you want to trade from the daily time frame, then um your higher time frame chart will be the monthly and the weekly. All right. But if you're on the lower time frame, say 1 hour and 4 hour, you want to be looking at this weekly price swings. All right. The price movement on the weekly chart towards the weekly trend direction. You want to see, okay, where where was a good place to enter the market. All right, which areas were high probability areas to enter the market. All right, so that's basically what you want to check. All right, so um backtesting backtesting is not what you should do all the time. All right, sometimes you want to just sit at right now at your developing stages. I don't need you guys to be in a hurry to make money. All right, don't be in a hurry to make money. What you should try and understand now is how all these things happen. Okay, so you might want to just be marking out your charts. You can do it for 1 month, 2 months, 3 months, 4 months, 5 months, 6 months. All right, so all those periods you can trade it live, sha. I encourage people to trade live when you start, but not everybody has that kind of money. All right, so but you don't really need too much money to trade live account. It's just that you don't have to trade to make money when you're starting. If you're starting with live funds, just trade for the sake of practice. Okay, trade for the sake of practice. So let me say you've been trading for a while, all right, and you find a certain setup that always repeats over and over and over again, all right. And you now, so you've marked out the setup, you've written it down in your book. Maybe you write number one in this setup. So thing happens. This happens also. This happens as well. This happens as well. All right. So you now find such a setup, and you now want to be testing it with your money. All right. You want to test it with your money. So don't go and be testing it when the market is not presenting that setup. For example, because when you're as a trader, it is very very easy to fall into the temptation of chasing price. Okay, chasing price. You know, I said one time that you should be like water as a trader. So as whatever the market tells you is what you should do. All right. So for example, now let's say you were selling here, you are finding good setups inside all these cells. All right, and the market now takes out this high over here. All right, so it takes out this high over here. Okay, so don't be in a hurry to start buying this thing because you know. Yes, it is true. We've had a reversal here. Okay, so the trend has shifted to a deep correction. Okay, but don't fall into the trap of hurrying. Okay, chasing the market. What you want to do is just to wait till the bearish condition resumes. Okay, till the bearish condition resumes. All right. So right now we are at the price hit a rejection block here on the weekly time frame. If you guys remember this analysis, okay, so we're somewhere up here. Then we said it will fall down to first target and second target. So now it has fallen to first target. First target was the beginning of a rejection block. So it looks like it has come into like the main threshold of that rejection block and it's rejected a bit. Okay. So as a trader, I don't want to be chasing this buy. You don't want to be chasing the market anytime. What you want to do is that you want to relax. Okay. You want to learn how price forms, learn how price prints. Okay, so you sit in front of the charts. Let me say if I if I clear everything on this chart right now. Okay, so today I'll come to the chart and what I'll do is that I'll mark out all my liquidity points and other key institutional reference points. Okay, so I can say um this area right here is a liquidity pool because they are equal lows right there. So this will act as a magnet for price. Okay. So what I want to see going forward is price coming down to take out the liquidity that sits below these lows. All right. So I want price to come down and take the liquidity that sits below these lows. All right. So it is yet to take it, just barely. It has not yet touched it. By zooming, you can see it's not yet touched. Right. So your target is to mark out all the institutional reference points. So right now I'm on the daily chart. I've marked out equal lows. These equal lows are my target. Okay. So what I want to observe is how will price behave as it is heading towards this place? How will price behave? Okay. Where will it go to before heading down there? Okay. So you can also mark out other institutional reference points. So if you zoom in here now, you can see that um, there is a fair value gap here. Okay, so from the low of this candle, from the low of that candle, okay, from the low of that candle, okay, to the high of this candle. Okay, so there was a area of price, an area of of price action. Can you guys hear me clearly? Because these people are making noise. Can you guys still hear me clearly? Hello? Is it stopping a lot, have you? Okay, let me just, you guys should give me a minute. Let me get my earpiece so that my mic can be closer to my mouth. Just give me 1 minute. All right, I'm back. I'm guessing it's better now. Is my voice a little bit clearer? Hello? Hello, can you guys hear me? Okay. All right. Okay. So they you can what you have to do is that you go into the chart and look at institutional reference points, all right? So here you can see that you have a fair value gap from the low of this candle to the high of this candle. And now the price has filled it in partially, okay? We have not totally closed the fair value gap, right? So we're expecting that price might react at the close of this fair value gap or moving into it partially. Okay, so what you want to do is you mark out your institutional reference point. Okay, so you can also mark this place as a recent high. Okay, but this this place is not important. It's not really important to mark this place. Can somebody tell me why it's not important to mark this place as a recent high? Okay, what's the reason? Okay. The reason why I would not mark this as the key reference point is because we are in a downtrend and I don't really expect price to take out my strong highs. Okay, so yes, you are correct that there's an other block that was mitigated here. Okay, so that makes this place a strong high. I would not expect price to take it out. The only liquidity you are looking for is external liquidity. Okay, liquidity that's outside the range. So this external liquidity here and external liquidity at this equal lows. These equal lows are not really far from here, right? So these are the ones we are looking for, right? So yes, you are correct partly. Okay, so this is a strong high, so we don't really expect price to come down to take it. Anything that price is moving here, it should not really go beyond here. In fact, this place is very far. Okay, it should not even go beyond this other block here. There's another block inside this red candle, so it should not even go beyond there. All right, so that's why I won't really mark out this place. This place is just really far. So inside this place, I'm now focusing on this place. So what you want to do is that you can when you mark out your liquidity points on the daily time frame, okay? Let me show you what you should be doing. I think I told some of my old people to be doing this thing. So when you mark out, so you want to keep something called a daily price log. Okay, daily price log. Okay, daily price log. Okay, so journaling is very important as a beginner. Journaling is very important. The time I dropped journaling is the time I started making losses. Okay, journaling will help you. You will not really be trading anyhow. Okay, because you know that for every trade you take, you have to break it down in your journal and it has to make sense. If you're not journaling, you can just go around and be taking impulse trades. If you're journaling, you know that, oh, this trade that I'm taking right now, I have to put it on my journal. I have to put it on. I have to take a chart of the daily chart, 4 hour chart, 1 hour chart, 15-minute chart, and write something about it. Write what I'm looking at, and the next day or the next week, I'll review it. Look at where price is. Okay. So what the goal of this thing is that you would go back later in the future and see, did price actually do what I expected? Did price actually do what I expected? Sure. The low of this is 1676.9. Okay, so what you want to do is that you want to be going back in time. All right, you want to be going back in time. So all these things now, you will take a picture of this. Okay, so you might put a text here now. Call it equal equal lows. All right, equal lows. So this is where you are looking to have price come down into. Okay, so you can take a screenshot of this, copy the chart image, put it inside your daily price log. Okay, you can now write your opinion about it. Okay, so on the daily charts, this is not your journal though, this is just your daily price log. Your daily price log is what will guide you as a beginner, is what is going to train your eyes, your anticipatory skills. Is one thing to backtest and is one thing to watch it happening. They are two different things. If you backtest now, you are doing what has already happened before, so it's kind of easy you grab. But um, seeing it unfold is another different ball game. You are seeing it live. You are predicting it beforehand, and in the future, you now see the after and say, okay, this is what happened, and this is why this happened. This is why this did not happen. So that's the point of this. So if you do this thing every day, I guarantee you that in the next 6 months is a long time, sir. If you do it for 6 months, you would have more understanding than 95% of traders out there. That's how good you're going to be if you do it every day. You do this price log every single day. All right. So let's continue, Sha. So on the daily time frame, time frame, time frame, gold is quite bullish actually. It's quite bullish, but the price action looks very heavy. So I I would like to see it go below the equal lows outlined on my chart. Okay, so this this should happen within the next month. Okay, the next month. So it should not, we're expecting it to happen within a 4 week period. A 4 week period. Right? So that's just it. You put your daily price log. So you can also put the date. So today's date is 5th September. 5th September 2022. Right? So you do this, right? You go down, you go into this place. You can also take a capture of this as well, right? So, let me write some text first. So I'll write some text and say that's a fair value gap. Fair value gap, reduce the fonts to this. So, fair value gap. Alright, so now you take, so in here, we are looking at targets now and you're checking out your fair value gap. So this is how you do as a beginner, not rushing to make money. All right, you rush to make money, you would come back to square one. You come back to square one as a trader. All right, you rush to make money, you will come back to square one. Okay, so you mark out your fair value gap there, then you go to a lower time frame to check out what is happening and what you can see. Okay, so check out what's happening and what you can see. So on the 2 hour time frame, you can see this other block that is inside the fair value gap. Let me go down to 1 hour instead. So on the 1 hour chart, we have this other block here. We have this other block there. Okay, I have this other block there. I might. So what you can do, let me, instead of marking it like this, let me use a rectangle so that it would look more presentable. Yes. So this is a 1 hour OB. You can go to 15 minutes to try and reduce it. Okay. So on the 15-minute chart, there is a consolidation. Yes, kind of messy. All right. So I won't really do anything to reduce it. I'll just leave it like this. But what I can do is that I would use a Fibonacci tool and try and find the mean threshold. Okay. So this is it. So I'll draw the price forward like this. Okay. I'll delete this now. Now you want to move that line to the front. You don't have to do the way I'm doing it. I'm just giving you an idea of how you should do your daily price log. Alright. This is how you should do your daily price log. I'm going to change the color of my line, and then you can put the text and say this is your mean threshold. Alright. Mean threshold of 1 hour OB. Okay. So now you don't expect you expect that price might reach into this main threshold, okay, but it should not really go far beyond this main threshold. So it should not really go far beyond this main threshold. Okay, this chart is looking messy. I don't like a messy chart, so I'm just going to um, use another line. Okay, then this will be my 1 hour bearish order block. Okay, so your first 6 months as a trader, you don't want to rush to demo trade or live trade. Okay, what you want to do is that you want to um, learn how it works. You want to learn how it works first before anything else. So now, price has hit the 1 hour order block. Okay, so if price should come down to here, that means that the trend has continued. Okay, if price should come down to here, that means that the trend has continued bearish, and you can look for sells. Okay, but there is a little imbalance inside this area, a little imbalance inside this area. Okay, so price might come into that and kind of guess, okay, that's already even come into that with this. Okay, that's come into that with this. So this gold might actually be ready to sell from here. It might be ready to sell from here, but this chart is, I think I have to remove this gold from my watch lists features. But let's just use it for now. We have already gone deep. Let me now go back to the start. So you have your, you can now delete what was this on the daily time frame? This was a fair value gap, right? This was a fair value gap. So I can delete those blue lines that belong to that fair value gap, right? I can delete those blue lines. So this right here, this is sell side liquidity. So this is liquidity for the downside. If price should go down and take out the liquidity that is down here, that means that we are bearish and we are ready to run down below the second target. Sorry, below this external liquidity, and then ultimately to those equal lows we have on the daily chart. So you can also um, put this on your daily price log. Okay. Yes. So it's nothing complex. Sell-side liquidity is just um, a liquidity that is a low. Okay, buy-side liquidity is a liquidity that is a high. So that means that um, for sell-side liquidity, they will be forcing buyers out of the market. For buy-side liquidity, they will be forcing sellers out of the market. It's actually don't actually confuse yourself. Okay, what you also need to know is that sell-side liquidity is when it is a low, and buy-side liquidity is when it's a high. If this was a bearish or be a bullish trend now, I can look at this place and say it's my next point of liquidity. I can call it a buy-side liquidity. Okay, so when is a high, buy-side liquidity? When is a low, sell-side liquidity? The graph, nothing special. So you can just put this on your um we've already copied it. So you now comment on this as well. All right. So you say um I have marked I have marked the bearish order block and main threshold threshold of the bearish order block on the 1 hour chart. All right, on the 1 hour chart. On the 1 hour chart. On the 1 hour chart. Price might reach up into the main threshold, but since it already reacted at the end of an imbalance, it might go go south from here. And go south from here. Okay, it might go south from here. So once it takes out the sell side liquidity outlined above, outlined above, it is safe to look for entries. It is safe to look for entries, right? So what you do is that you choose one currency pair. It might be one, it might be two, right? But just choose two. It can be gold, it can be a currency pair or anything, but I'm assuming that most of you want to trade Forex, right? So if it's Forex you're trading, just choose one. Might be Euro USD, might be GBP USD, might be anything. All right. So once you choose that currency pair, okay, what you want to do is that you will do this daily price log stuff. You do it every day. Okay. Um, at the beginning of the week, you can do the daily chart and the weekly chart. But during the week, you want to only be adding the price movement on the 1 hour chart. So anything that change on the 1 hour chart, because nothing much will change on daily chart. Nothing much will change on daily chart because the daily chart is slow. So probably at the end of the week or at the end of 2 weeks, when the price finally gets to your target or changes and goes towards another direction, okay, then you now update on what is on your what's it called? What is on your daily and weekly charts on your higher time frame charts. Okay, but during the rest of the week, what you want to be adding is just price logs for your 1 hour chart, your 15-minute chart, and your 4 hour chart. Okay, so that's basically it. So this right here now, okay, I also add the 15-minute chart I might go down to, okay, this is already 15 minute chat. So I might go down to the 15 minutes, add this screenshot as well. And then what I'll do is that I will now save this document. I'll save this document. If you have Google Drive now, go to your Google Drive. Okay, what you can do is that you create you create a folder. Okay, you create a folder, all right? Then you call it your daily price logs, daily price action logs, all right? Daily price action logs. Okay, so this now I'm telling you to do is actually a lot of work. Not too much work, sha, but where the work will come in is being consistent. Okay, being consistent. Everything good is quite hard. Okay, so you if you finish one document like this, you put it, write the date at the beginning. You can say um log log entry. I say log entry September September 5, 2021, right? 2022, pardon me. Okay, so once you have this, you can um add a file from your Google Docs, right? I made a mistake here. So if you go to you search your drive anyhow. Let me just search if I can find that file here. Log entry, sorry. Log why can't I find it here? Log entry. Okay, let's see. So this now you can see the log entry I just created. You can move to my drive, daily price action logs, and I move it inside there. So once I click daily price action logs, I'll find it inside there. So you keep on making your log entry for different days of the week. You can also group it under different months as well, depending on how organized you are. All right. So you keep doing this. At the end of the week, at the end of the month, you go back, read all your action logs, look at what changed. This is how you learn by watching what the market is doing and how the market is printing price. This is how you learn. Do it every single day. Don't focus on making money. Just focus on learning um how the market moves first. Learn how the market moves. You know that your technical analysis is no longer the problem. And then you move to psychology and risk management, which are the second most important things. In fact, they're the most important things. Okay. Technical analysis is secondary because you can learn anything. It keeps on changing, it keeps on updating. So something I learned today now, I might come tomorrow and tell you that there's another way of checking the other block that's changed. All right. But the psychology part and the risk management part, it never changes. So you need to focus on that. Okay. During the psychology part, I don't know. I can't really teach you all I know about psychology, sir, because I spent a lot of money on that crap. But I will teach you the most important things that you need to know. I'll teach you the most important things that you need to know about reading psychology, and I'll recommend some of the books I read. Don't be scared of reading books. They are very easy to read. The books I'm going to recommend, they are very fun. They have exercises that I can practice and do. If you want to do it, the thing about everything in life is consistency. So if you can do your daily price action logs, read a book, probably 10 or 20 pages every day. When you finish it, you get the lessons from that book, apply it to your trading, and you keep on moving. All right. So just learn. First of all, learn. Okay. You can take trades. You can take it on your live account or you can take it on your demo account. I don't think it matters much like that. Um, live account is better though because um, it will give you an insight into how you react to losses. Okay, so trading your live account would help you understand your tolerance for risk and tolerance for loss. Okay, so if your tolerance for risk and loss is high, you know that you have to reduce your risk or thereabouts. I recommend risking like 1% of your account or highest 3% of your account. But some people have a high risk tolerance. They can risk 4%, 5%. But 5% is crazy. Okay, 5% is absolutely crazy. I should not risk more than that, except if the account is very small. Okay, once you reach like $1,000 or above, stick at stick to 3% or less. 3% or less. Okay, as your risk. Okay, so do these daily price action logs. Be diligent with it. Do it daily. Okay, back test as well, but your back testing is not as important as this daily price log. Your back testing is not as important as this daily price logs. Back testing will help you improve your eyes. Maybe you can do back testing for like 30 minutes a day or less, right? But backtesting just looks really easy. You can just see, oh, one other block, two other block, 20 other blocks. Out of 20 other blocks, 15 other blocks worked. All right, so it will to make you so confident. Okay, but when you now start trading, you think that from your backtesting now you are a guru, you are a boss. Okay, but when you start trading, you realize that the um the results are not really the same. Okay, so where you develop your anticipatory skills. So anticipatory skills is um you recognizing something before it happens. That's your anticipatory skills. So where that comes from is from this daily action log. So imagine that you marked out your equal lows, okay, and you kept on keeping this log to the point that after 1 or 2 weeks you saw price get down there. Slowly and steadily your confidence will begin to increase. Your what would I call it? Your skills, your anticipatory skills and your conviction on what is going to happen next in the market is going to increase. Do this thing for 6 months. I challenge you to do this thing for 6 months. All right. Don't say 6 months so long. All right. If you don't do it 6 months will still come and pass. Okay. So whether you did it or not, your 6 months will still come and pass. All right. So do this price action logs for 6 months. You would have done it every day for like 130 180 something days, which is a lot of data. Okay, a lot of data. So yeah, this is what I want you guys to do every single day as a trader. Okay, so mm, yes, this is all for daily price action logs. So what you do is that let me break it down to a process. All right, so let's break it down to a process. So docs new. Okay, so um so one, you get um daily, weekly, and monthly charts. Mark institutional reference points. Okay, reference points. Then to get down to your 4 hour charts. Get down to your 4 hour charts. All right. Mark out anything significant. In fact, the first step is actually to choose one one asset, okay, or currency pair. Choose one asset or currency pair, okay. Next, get daily, weekly, um, mark institutional reference point. Go down to your 5 hour charts, mark anything significant. Okay, log your 1 hour chart, your 1 hour chart, log your 15 minutes chart. Okay, so once you do all these 5 steps, you are done for the day. Okay, so get a daily chart, weekly chart, and monthly chart. Write out a little story about it and where you think price will go. Get to your 4 hour chart, mark anything significant. Go to your 1 hour chart, mark anything significant as well, and put it in your price log. Go to your 15-minute chart. So you stop at the 15-minute chart, don't go below this. All right, stop at the 15-minute chart. If you like, you can put a 5 minute chart, but mm, 5 minute chart, I don't really think is necessary. So it's not demanded, but you can add it. Okay, so once you do this, you save the document, you're over for the day, you're done for the day. All right, so you do this for the whole week. At the end of the week, during the weekend, you go back and look at all your daily price action logs. Look at where the price was at the beginning of the week and look at where the price is now at the end of the week. All right, so that will give you so every day just mark out the changes that happen, mark out the changes. So by tomorrow now, this thing might have come down to here. Okay, might have come down to here, or it might shoot towards this main threshold and start rushing lower. All right, so by tomorrow different things will have happened. So you go to your new price log and add everything, write what is different from yesterday to today. Okay, so this is how you learn and predict, or how will I say predict, or this is how you get an instinctive idea of what the market is going to do. So I just look at this and your brain will know, all right, you might react around there without really looking to deep. Sometimes you will see when we're on the chart, I will just look at the market and I know that this is the area I should have reacted from. Okay, it comes with time. Okay, I can just look at this and say, okay, there's something inside here, something inside here. I'll just mark out that zone, even without zooming in. From just seeing the candles, the outline of the candles, you can know something is here, something is here, or there's an engagement here, or something else. Okay, so this is how you learn it. This is how you learn it. Daily price action log. Just do it diligently. Don't bother about making money. I assume that everybody here has some little source of income that is not forex before you came in. Okay, so just keep that. Keep saving up your money. You can put your $10 or $20 inside an account. Once in a while, when you see a good setup, you can test it. So you're not testing it to try and make money. You're testing it to get a feel of how a trade is. Okay, of how a trade is. Okay, so yes, that's basically it. I want to move to journaling. Does anybody have any question about um doing your daily price logs before we move? Yeah. You said I use it online. I use it is on is a web page, as you can see. There's so the shortcut for creating a new Google Docs is docs.new. So once you press docs.new and enter, it would create a new document that's under your Google account. So that's how it works. You can also install the app on your phone. I don't know if they have the app for PC, but you can install the app on your phone. Or you can just use Microsoft Word. You don't have to use Docs. Docs, I just like Docs because anything I save here is on the cloud. Even if I lose my system, once I open Google Docs or anything, it's still there. You can access it anywhere in the world. I just if someone threw me to Sokoto right now and I have a computer, I can access all these things I'm teaching you here. So even if I lose this laptop or I have to use another person's laptop, I can access it here. So that's why I use this cloud service. So, it- huh? Okay, it's not me you're talking to. So yeah, you can use any text editor you like. You can use Microsoft Word. Okay, Microsoft Word is good because I don't know, anyone is cool, sha. I just use Google Docs because of the cloud service, and I'm just more used to it. I don't have Microsoft Office on this laptop, so that's why I use Google Docs. Yeah, yeah. Sorry.